Hey folks, welcome back. And today we have a very interesting day. Today we had a turnaround Tuesday and a absolute sell day. So, how do we figure that out? How do we go into today with a sell bias? That's what I want to cover today for the S&P 500 future, S&P 500 and the SPX and um, the futures and options alike. And then, if you stick around, we're going to go through Bitcoin, we're going to go through NVDA, we're going to go through SMCI, and finally, we're going to go through Tesla. All right. So let's go ahead and get started. And so the first thing I noticed this morning, and what I always look at first, is what was the institutional volume profile from the day before. And how do we know this? Well, there is a tool that we do use. It's called Market Webs, and it's very good. And what it does is basically plots the institutional volume profile from the day before onto the current day. Very cool. Anyways, so what I first noticed, especially with the S&P 500 E-mini futures, was that they opened below the volume profile. And then overnight, as you can see this kind of electric blue line going on here, that's anchored VWAP. So that's kind of telling you what's happening as time is going by and what the volume is doing on average. And it's staying below. And that's a big hint that they are pushing it down, which is, normal overnight. It's not a big deal. So, what happens when we get to the open right around 8:30 Central my time? And at this point, we're pretty far below the volume profile from the day before. And we could see that there was a very large dump that happened towards the end of the day. And, our initial bias is, the way we work is we really don't try to go long unless we are at least above the bottom of the value area zone, which is way up here. And for us to try to get long and try to pick the bottom, it's not the game we're into. So what we do is we can either look to go short or we just don't trade. And if you haven't been trading for a very long time, I would just probably sit on the sidelines on days like these. There's no real clear indication of a entry right at the open. It can get kind of messy because of the volatility. So, we take all this into account. And then, our final factor really, at least when we're talking about just trading futures or getting a bias, is, our EMA filters. And you can see that they're pointing down. So, we had a nice confluence where it gave us the bias to look to the downside. Where that downside would be, well, we've got, if you look in the upper right-hand corner of this chart here, right before the open, you can see this box, which is the weekly volume profile market web. And, we're way up here. You got to think that maybe they're targeting that. And then on the upper left, we have the daily. This was today. And at the open, it wasn't really clear, but it is a new month, and we hadn't tested the top of value for the month yet. So this is kind of normal. You see price try to test these major volume area zones. So that's kind of a quick and dirty way of how we look at it before market. And then so when we look at all this, we have a bias to the short side. So where would you try to get short? That, on the other hand, is very difficult, especially for today. If you look at the bottom right here, it's got our very low time frames. And, not only out of the gate did they start dumping, but then we had a slew of economic data come out at 9 o'clock or 8:45 through 9 o'clock. So you get a big volume spike, and then you have to wait for it to reset. At least that's what we do. And, they just hit it very quickly. Let me just zoom in here real quick. So they hit it very quickly after those releases at 9 o'clock here. And you can see it up in the top right hand corner. We've got our financial juice news working there. So yeah, we knew the news was coming. Did we know that they were just going to give us a couple minutes and then, nuke it downwards? No. So for me, I kind of just waited. We had a nice little lull or little volatility compression here, which is nice. I did hit this just for a few points, nothing major. And yeah, I mean, it just kept going. And we'll move over to the gamma exposure bot to kind of show you how they started laddering down from there. So the point is with this, we weren't looking long at any major or any point in time except maybe towards the end, because generally there's a ramp in the last 20 minutes, especially in a bull market. So yeah, we do look for that, but today we just didn't execute on that. But let's move over to the gamma exposure bot. Okay, so let's go through the gamma exposure bot and what happened today. Let's just kind of fast forward to the 10 o'clock or 9:45, 10 o'clock. This is Eastern for the gamma exposure bot. So even at, let's put it right there, 10 o'clock. Yeah, I mean, it was just barely positive here. If you see this here, we had a major positive gamma strike at 51.20, and then the low at 50.90. Now, this is right at that initial big price spike upwards after the release, and then let's see what happens right after that. So yeah, you see this flow come in here, immediately negative about 6 minutes later. And then, yeah, they just started piling in. So let's get it to 11. And at this point, we're negative $65 billion in gamma exposure. We've got a major positive gamma exposure at 51.10 now. So they've dropped it down. These guys quit. We've got major negative gamma exposure at 50.80. All right, so this is where it gets pretty interesting. Now you can start kind of drawing your lines on your chart and seeing if this is indeed is where they want to go. And especially if you already have a short bias, this is kind of like, all right, in our minds, especially with this much negative gamma exposure at this time, that's a lot. That's a lot. So that's a big hint. Yeah, to have that much and only within an hour and a half is pretty big. So let's keep going. And you see it's jumped up to 91, hit 50.80, and then you're starting to see these levels start to grow. These are not growing. Get a little bit of a bounce, maybe a little bit of hope for bulls, but yeah, it's dropped a little bit, but we're still not positive. And yeah, here we go, almost, and nope. Yeah, that was that small volatility compression. Almost got back to positive net gamma exposure, but still 20, 30 billion away, which is kind of far. So yeah, so they just keep the tape running here, and now we start getting later in the day. Things get a little bit more extreme, and you see they start pumping this thing to negative 123 billion, 50.80, still hanging around there. Let's see if the dam breaks. And oh, yep, they started at 50.70, and yep, you see strike price start to float down. That's this white line. Gets down to 50.65. Yep. And just kind of sticks around there until the last 20 minutes or so. Yep. There we go. So let's do that again. So you see how things start to expire. These guys start to take their profits and woo, right back up. All right. So let's move back over to the charts, and we're going to go over Bitcoin, NVDA, SMCI, and Tesla. All right, so now we've got Bitcoin here, and I mean it's pretty straightforward, folks. Everyone was waiting for it to hit its all-time high, right over 7,000. If you look at the lower left here, it did, and proceeded to absolutely dump. And this was a 7,000 point move. Yeah, hopefully you got out and didn't get rugged, as the kids say. This is a 300% move over the average true range, which just means like it's 3 times the normal daily move intraday. And yeah, that was a big one. So they came in, dumped, and looks like they bought it right back up at 6,000. And then in terms of volume profile, basically what we're seeing here is on the daily chart, we're still above the monthly, but we're seeing a lot of volume come in. This is very typical of people taking profits. And then if you look at the weekly, literally tagged a very high volume node, 6,000. So they tested that. They got a little bit of a bounce. So that's a good thing. But we can see that right around 9:30 or so, it started coming into the market web value area high. And if it can't close above that, and VWAP and moving averages or our moving average filters aren't also turning, it's called the 80% rule, and you're going to start seeing it kind of go back through and backfill previous volume at price. So you're going to see it come all the way back through this zone, and then it starts to come back through on the weekly zone on the top right here. So that's fairly typical. If it doesn't react to the top, then you're probably going to see it start to test a point of control and then the bottom of value. And yeah, that's how we look at that. There's so what to expect with Bitcoin. Well, if we look at the next day, we'd like to see it come back above 6,700 and then get above the point of control, which is it's going to be tough. This could keep coming down. We'd like to see it at least break back above this, also the weekly side too. Otherwise, you might see it chop around here for a bit. Yeah, I mean, in order to get uber bullish again, you want to see these volume profiles stacked on each other. So it's going to look very similar to, let me show you here, these profiles. So you see how price stays above these boxes. Yeah, that's what you want to see. You don't want to see price hovering below these boxes. That just means you have overhead supply and people are trying to get out of their position. All right, so let's move on to NVIDIA. Unlike most of the NASDAQ, this one held up pretty good. And again, you see the volume profile arrays. See how their price is above. And today, it started testing the bottom of it, but got snapped right back up. So you could see some chop here. Again, in order to stay bullish, you want to see tomorrow where it stays above this area, the 85 or 852 area. Anything below 843, you're going to have problems. And right now it's in a consolidation pattern, basically meaning it's not making newer highs or it's not making lower lows. It's just chopping in the middle. So could it go right back up? Absolutely. But we want confirmation tomorrow, and we want to see where volume wants to take it, along with option volume. So, all right. So let's go to SMCI. Again, I covered this one yesterday because it's definitely a humongous short squeeze that happened here. And short because look, I mean, yeah, maybe you could have short overnight, but as soon as the market opened, it just ripped right back up. So it's like they don't learn, right? It's again with this stock, you've really got to be careful because of the short float or I'm sorry, the low float and the short interest on that low float stock. Where if you just get one break, I mean, these guys have to short cover, and you get these big spikes. So still looking okay. If we're to look, if SMCI is to kind of start, looking to the downside, you'd want to see it well under 1,000. Okay, so you still have support up here. You could chop around here for a little while, but if this thing's going to drop, it's got to start by breaking 1,000 and then not being able to regain that level. Yeah, so it's still looking very strong. Am I messing around with it? Not too much. I think it's at this point kind of known in the universe. We were trading it back when it was sub 100 and just seeing its humongous average true range, and just couldn't believe it. It was one of those stocks where, kind of like the COVID stocks, that just every day it was moving, and we just had to trade it. And now that we're at this like ridiculous level, there's a lot of institutional short interest. It's just it's a tough one because there's just not a ton of liquidity and the spreads are high. So not interesting to watch. Not interested right now in trading, at least not yet. All right, and then finally, let's go to Tesla. All right, so we've got Tesla, and much like the rest of the market, this one has been, much like the rest of the market, it was down, but unlike the rest of the market, it hasn't been performing very well. A lot of, it's just, if you look at the profile, it's much different than the indexes. If you remember what these boxes look like, you see these arrays of the daily market web volume profile, where you see institutional volume keep pressing it down. But interestingly enough, you've got potential for this to start to create a base a little bit. And it's around this 177, 180 area. You can see on the daily that we've wiped out a bunch of folks. We are in a consolidation or volatility compression on the daily. The monthly volume profile doesn't look great. The weekly doesn't look very good, but a little bit of hope here. We are starting to get above this daily market web market profile. You just want to see it hold, and you want to start to see these averages, these EMAs, start to flip green. You want to see it get above this 185 area here. This would be very good, because at that point you're now at the bottom of the value area on the month, and that would trigger what would be called an 80% rule, and you could see this thing fly right back up to 200. Is it going to happen? I don't know, but there's a lot of things that need to happen for that to happen. And the first step is for price to stay above its daily market web market profile. I'm sorry, volume profile. All right. Well, I hope you guys find that helpful. Let me know in the comments. Set your alerts. I'm going to try to do this maybe a couple times a week. Try to subscribe. That would be good. All right. I'll see you in the next video. Thanks.